Thanks for clicking! The Canadian Real Estate Association, the CREA, has released Canada's real estate data for the final month of 2024, showing a real estate market whose momentum has stalled. Or, as the media puts it, home sales are rebounding. Fear not though, the CREA has trotted out its hostage, its chief economist, Sean Cathcart, who will let us know how 2025 is set to play out.
Gonna be amazing!
And it's not just Cathcart pushing a narrative that appears to be disconnected from the data, with CREA releasing a report yesterday announcing a 3.8% increase in pricing in the fourth quarter of 2024 amid lower rates and easier lending rules, which would all be great points and a reason to think the market was going to take off this year. If interest rates were lower, if lending rules were easier for the period under question, and if prices had risen 4%.
Just tell me what to write on there. I'll write it on there.
So what I want to do today is go over Canada's real estate data for the month of December while discussing the interview with Sean Cathcart, take a look at these predictions being made by CanadaRealEstate, and then discuss some implications. We do have a big couple of weeks ahead of us, with Stats Canada set to release Canada's inflation data next week, and the Bank of Canada set to make its policy rate announcement and press conference the week after. We'll obviously have an update out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. On to the data. First up, the benchmark price. The benchmark price is the price of a home that represents the most popular set of features, which does appear to be up a bit in December. The benchmark in November was $721,200, and that bumped about $2,000 to $723,600 in December. Though I think it's worth noting that that increase in the price was made possible by a downward revision on the part of the CREA in its data, which, as of December, had said that November's benchmark price was also sitting at $723,000. But, with nary a mention of said revision, let's not let the facts get in the way of a good narrative.
The country as a whole, the national composite MLS home price index was up 0.3% month over month. Remember, that's not like a year-over-year number. Just in a single month, that's a lot, or a fair bit.
But Cathcart also went on, going into the significance of these price increases.
And that follows on the heels of a 0.4% increase in November. That follows a very long period where prices were basically zero, flat for, possibly the longest period in history. So,
did anyone else catch that? Let's pause and take a look at the image provided by the CREA to go along with that narrative, showing the longest period of flat pricing in history. Which one of these looks longer? The image showing the opposite of the narrative is right beside said narrative. Like, you're doing my job for me.
That'll show 'em.
But it didn't stop there. In a stark difference from December of 2023, sales actually fell fairly substantially in December of 2024. In 2023, December saw an 8.7% increase in sales from November, whereas this year they fell by 5.8%. Definitely not the earmarks of a Canadian populace getting ready to jump into the market come spring of 25, not the earmarks of a populace trying to get ahead of that big spring surge, despite the media's perpetual attempt to convince them. But, says Cathcart, this 6% decrease in sales isn't as big of a deal as it might initially look, as November sales were especially high.
sure, yeah. December sales were down compared to November, quite a bit, almost 6%. That sounds like a lot, but it's from a very high number in November.
Which would definitely be a good point were it true. But were November sales really that high? Looking at the sales numbers for the past 11 Novembers, they don't appear to be that high to me. And remember, we have a lot more people in Canada than we did pre-pandemic. So really, those sales numbers adjusted for the population should be much, much higher.
Well, what's this about failing a math quiz?
And further, this is the biggest slowdown that Canada has seen in its sales numbers from November to December for the past 11 years. Again, not exactly the sign of a market trying to get ahead of itself, ahead of its skis, heading into 2025. And finally, the CREA forecast, which, again, doing my job for me.
Forecasting takes a lot of things into consideration, especially since it's an election year and we have things going on south of the border that we can't control. So how do you go ahead and forecast and prepare a forecast?
Let's start with the numbers like we always do. This is just the Coles Notes version because it hasn't really changed the last couple of forecasts for 6 months or so. We expect a significant unleashing of pent-up demand this year.
And there it is. So for the past 6 months, the same forecast, nothing has changed. Despite the new administration coming in the United States, despite the potential tariffs and retaliatory tariffs to follow, despite our lack of a prime minister, despite all of these exogenous factors, and the forecast still doesn't change, which I think tells you everything you need to know about CREA forecasts.
I will never change.
So, in summary, the benchmark price up a bit from a downwardly revised number in November. Sales down 6%. Sales slowing at the fastest pace for the month of December than they have for the past 11 years. And despite the mounting evidence and the rapidly changing environment, the CREA is not changing its forecast. Speaking of forecasts, let's take a look at the one from Aurora LePage being floated around the media, noting that Canada's real estate market could be on the upswing. CEO of Aurora LePage, Phil Soper, took the time to let us know what factors would be driving that rebound, noting that a decrease in interest rates and new mortgage rules are helping younger Canadians by increasing borrowing power, which, of course, is, as we'll see, only sort of the case.
We take his word for it.
First, fixed mortgage rates weren't really that low in the fourth quarter of 2024. If we look at Canadian bond yields, those which dictate fixed mortgage rates, fourth quarter yields were about where they were in the third quarter, with a decent 5-year fixed in December being about where it was in the third quarter. So no, fixed mortgage rates aren't really falling, ergo Soper must be talking about variable rates. With the Bank of Canada having cut rates massively last year, he must be talking about those lower variable rate mortgages which are now available. So let's take a look. Is variable rate usage rising? Well, since Aurora LePage doesn't provide us with sources to support its narrative, let's head over to Stats Canada and grab the fourth quarter variable rate usage statistics for ourselves, which of course do not exist as the data is only available up until October. So I'm not exactly sure where Soper got the data to support that statement.
We don't need that.
But let's do our best to be thorough. Is that statement supported by the data that is available? Let's take a look at variable versus fixed usage in 2024. Back in January of 24, variable constituted 11% of all insured mortgages, whereas fixed constituted 89%. Fast forward to October, and variable constituted 11.5%, whereas fixed constituted 88.5%. So, a 0.5% increase in variable rate usage doesn't exactly support the argument that Canadians are taking advantage of these lower interest rates. And we saw similar behavior for uninsured mortgages as well, with variable taking up 21.6% a year ago, and then 21% as of October. Again, the argument that Canadians are piling into variable, which is the only rate that's actually moving down, not supported by the data. Yet, given that data staring us right in the face, it seriously took me like 10 minutes to double check the statements. Here's how the media reported on Soper's musings, noting that sideline buyers regained confidence and took advantage of improved affordability. Momentum built steadily through the final months of 2024. Fixed wasn't any less expensive than it was in the third quarter, and variable rate usage did not uptick, at least as of the data that's available right now. So what exactly are you talking about?
We really didn't think anyone would notice.
Speaking of what are they talking about, let's move on to the lending rules, which, according to Aurora LePage, those rules are already helping young Canadians. Well, first off, I think we're using the word help awfully liberally. What the extended amortizations do is allow younger Canadians to take on more debt, allowing higher real estate commissions for those in the industry, and helping older Canadians, those who already own homes, prop up their values after years of being disconnected from underlying income. But sure, helping.
But I think a modicum of gratitude would not be out of line here.
But the problem with this narrative, beyond not understanding what words mean, is that these new rules didn't come into effect until December 15th. Which means we have absolutely zero data, zero evidence available to tell us how much these new mortgage rules are being utilized out in the market. How many new buyers are using those 30-year amortizations? We probably won't have anywhere close to a bit of that data available until at least March or April. So we have absolutely zero idea how much these new rules are contributing to that 3.8% revitalization and the pickup in the real estate market. Now, if you look at these two articles, the first one, home prices are up 3.8% in Q4, and housing market on its way up again, you'd probably get the idea that there's some momentum happening in the market, something really interesting to see, something that you might even fear missing out on.
You work for me.
But if you go to the actual article from Aurora LePage, you'll find out that it's discussing a 3.8% aggregate increase quarterly year over year, meaning in 2024, the fourth quarter aggregate price increase was higher than the fourth quarter aggregate price increase in 2023.
You better watch out.
And it's not even Royal LePage's fault on this note, as it noted right in its article that quarter over quarter, quarter 3 of 24 to quarter 4, prices remained essentially flat. And that flat pricing, that most recently flat pricing, led Canadian mortgage professionals to lead with the headline, "Housing Market on the Way Up Again." So, to summarize how this article is being presented, we've got several factors that are converging. First, we have lower interest rates, except that fixed mortgage rates aren't exactly lower and variable might be lower, but no one's using them. You've got new mortgage rules about which we have zero data, which is leading to the 0.5% increase in house prices over the past 3 months.
You're too late.
So again, we've got a great big disconnect between what the data actually says, what data is available, and what is being presented in the media and by the real estate industry. Now, as we've discussed before on this channel, we obviously can't take at face value predictions, forecasts, or data being made by those who have an interest in our behavior, who have an interest in the outcome. But the media still doesn't appear to know that. That's not what these headlines say. These headlines paint a picture of a market taking off, of prices heading up, of a revitalized market on these new rules and lower interest rates, both of which are simply not the case, leaving the reader, the viewer of these headlines, with the impression that the market is doing something very, very different than that which is supported by the data. Which, I think, to a certain extent, that means the emperor has no clothes. If the market was doing what the CREA says it's doing, what these reports say it's going to do, then we wouldn't need this disconnect. The data would very much match the narrative, as it did in 2021. With that said, we will continue to track the disconnect between the data and the narrative on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.